August 5th, 2019, guys. Good morning. It's a Monday, fresh week, fresh opportunities. Here's what we got. We think the bottom is near. We're showing some signs of institutions actually coming in, trying to start buying some shares on Friday. Now, clearly, we are gapping down today again, but we believe at some point the market will be reversing. Specifically, we're pointing to a end of the day time frame between 3 and 4 p.m. We're actually going to look at a situation that highly resembles the situation right now in the markets based on the market moves and the VIX environment, and we're going to take a look at what could actually be happening next. Now, if there's some signs, but not strong signs of the reversal right here, you kind of want to visualize this as the bottom is like completely falling out. So in other words, we're opening lower, the futures are moving lower, and then they kind of stall out, and then at some point in the day, they take just a huge drop, and at 3, 4 p.m., everything is reversing to the upside, like lightning fast. I'm talking, guys, the drops we've seen the last couple of days, I mean, it's nothing, okay? This reversal could be really, really fierce, and typically, studying the market moves, okay, we observe these reversals 3 to 4 p.m., or tomorrow we could go into a move top 13 situation where the markets are going to yet again drop in the morning, they're going to reverse and sharply move higher. Now, clearly, there's a lot of stuff that's taken place over the weekend, particularly in response to Trump implementing all these new tariffs. China is depreciating their currency, and in a way, it ends up being a win for China. We as American consumer here in the States, we get punished. Well, we still got to pay the tariffs, but hey, China gets away without damaging their economy because they just simply drop their currency. So from that perspective, China is winning this. There's definitely a problem, could be a serious problem on the horizon with the fact that, you know, now that the currency is dropping, it may not be interested in buying as many of U.S. treasuries, which creates a huge issue, again, for the United States. So China's coming out ahead really nicely, and I think with the fact that it depreciated the yen, it really tells us they're just going to wait it out. So in other words, we're not going to see any more crazy responses from China, probably until Trump is not going to get reelected. And why would Trump not get reelected? Guys, look at point number 4 here. I mean, look at what he's just done. China officially refuses now to buy any agricultural products. Now, I know he's saying the solution is, oh, we're just going to subsidize the hell out of this. Okay, well, I mean, the fact is the farmers in the United States have been subsidized for many, many years. So in a way, nothing changes. But I think the sentiment, okay, all over Midwest, all the states that could actually help, that actually did help Trump win the election, I don't think they're going to be on board this time because he really killed it. He really did go overboard with China not buying any agricultural product, puts a lot of pressure on this Midwest. And again, even though Trump is saying, hey, I'm just going to subsidize the whole thing, I'm going to make it up, I don't think there's a lot of happy people are going to be in those states that are heavy reliant in this agricultural sector, which could definitely cost him a few votes, which could be crucial in the next election. So between this Chinese very smart reaction, between Trump doing some stupid things here, I mean, we're clearly in a situation where the market is trying to pick out the direction. There's more positives for the market overall still rather than negatives. Federal Reserve's got no other way out but to actually drop the interest rates and slightly depreciate the dollar to just keep the equilibrium going here, okay? It also hurts all the United States companies that are selling goods to China. China is not going to buy them because, you know, lower yen means the cost of those goods is going to increase. China is also seeking partnerships with a ton of other countries, Brazil, Russia, so on. So, which is no surprise. I've mentioned in many videos before. It's been doing that now for quite some time over the last 5-10 years. So overall, it just seems like Trump is really losing the situation here, losing the grasp. But the only thing that could save the market is the fact that Fed will reduce the rates, which is overall positive. And the one chart that actually shows us why we think the rates are going to go lower very soon, we're going to take a look at it in just a second. Some of the stocks to watch, guys, today are Cars.com, Take-Two Interactive, Marriott, HIIQ, Healthcare. Now, Most of these, they are announcing earnings after hours, so we are going to be trading them tomorrow. And for the purpose of the next day or two, until we see this clear buying behavior coming in, guys, we're not really trying to take any directional trades here because the market could be stalling out here based off the charts before the bounce could be coming in. So it doesn't really make sense to buy puts here because this is the day 3 of the drop, and it doesn't really make sense to buy calls here, not yet, because you don't want to be too early. But we clearly are going to be timing that reversal. Yes, we did miss the drop over the last couple of days based off this Trump tweet, but we certainly don't want to miss this reversal. Our goal is to focus on what's coming next, not what has taken place over the last couple of days. So with that said, here's the chart of gold, which tells us that there's definitely more rate cuts on the horizon. Here's gold trading at 1474 pre-market, really breaking out above this key 1450 level. So even though after the Trump tweet, we got the market direction temporarily wrong, we did mention in the video about the Federal Reserve cuts that initially gold was going to go lower and then it was going to go higher. So that's exactly what actually happened to gold. So for those of you that traded these gold futures, you guys should be doing rather well. And for those of you that are trying to look into how to trade these guys on TD Ameritrade, you simply go /GC, okay, and it'll pull up an option chain. You can pick out your strike and so on. So with this said, here's an interesting observation from Friday on how to actually trade the earnings for this week. So here's a company, OLED is the ticker. And for those of you guys that took the trade, man, it produced lightning returns within minutes. We actually sent the alert to get into the put side right here, right before this drop actually came from 210 bucks all the way to 188. So literally 3 minutes after the alert, this move started coming in. So for those of you that actually pulled the trigger, congrats guys, that was an easy trade. But more importantly, to learn from this is the fact that initially OLED announced really great results. Particularly surprising, its sales in China has hit some record levels. So even on this news, the stock initially pops and then drops. So expect even companies that are going to be exceeding expectations and results this week in particular. I think this is a blueprint to trade any type of earnings that the companies are announcing, especially if the move after hours is rather substantial like it was here. The stock actually moves from 208 all the way to 242 and then completely reverses. There was a couple of other examples like this. You guys can look them up. Another one that did exactly the same thing was ANET, A-N-E-T is the ticker. The chart looks identical. The stock initially moves up to 280, finishes at 240. So these reversals on good news are happening. They're coming, and I think using this strategy right here will make guys a bunch of money this week. Now, we are officially, what we were sending out in the group on Friday, that this level of 29.31 intraday seemed to be the level that the market was really struggling with and had a lot of difficulty with. It actually, we said that if it's not going to break above this level by the end of the day, then we should expect a continuation of the move lower. So far pre-market, that is exactly what we're getting. And the market is hitting these levels of 28.85 at the point I'm recording this, 28.90. Now, this is a very important level because this was the level of support exactly 2 months ago. So I think it's going to be very difficult to break this level, but it's also going to be very difficult to break this level of 29.31. So in a way, we could be trapped between 28.80 and 29.30 within these 50 points for the next couple of days, unless some surprise, surprise, another Donald Trump tweets comes out that this time could actually be positive. So at this point, the markets have been going lower for 3 days in a row. Okay, and the importance of that, just remember, markets, they never drop in straight lines. So when you get to the day 3 of the drop, you got to be cautious. This is the point actually when most of the traders are opening up their screens today and they're like, oh shit, another 300-point drop. And they're thinking, oh man, that's it. I can't take this anymore. I'm just going to go buy puts. And so as soon as you buy puts, the market is reversing. So the probabilities of a reversal today are much greater than on the prior 2 days. And even if the reversal is not near, like it's not near right at the open. In other words, if we're not getting a move 13 type reversal that happens within the first 30 minutes of the open, the reversal could actually be taking place between 3 and 4 p.m. Now, the importance of that is you don't want to just jump out, because at this point it's clear to everybody that the market is crashing. So in these circumstances, your options premiums are going to be priced with a huge premium. So if you're buying these puts today at a huge premium and the market does not fall further, that's going to be a loss. So you want to avoid situations like this. You basically want to avoid buying puts after something has been moving lower for a substantial amount of time. So this is not an ideal entry. A much better entry would be, if you're really trying to play this on the put side, would be to wait till the market gets back to this 29.31 level. And if it doesn't break above this level on strong volume, this would be an actual area to come in and short the market. So keep those things in mind. The best trade for today we are considering, as far as a directional trade, if certain conditions are met, would be actually waiting out till the very end of the day, like 3:30, and see if some strong volume coming in on the buy side, and that would be actually the point to jump in. Now, if you miss that point, don't worry, because this continuation of buying behavior needs to be reaffirmed and reconfirmed in the morning. So if you want a 100% solid trade and you're really trying to work this reversal to the upside, wait for the first signal between 3 and 4 p.m. and see if institutions are really coming in and buying. And wait and see till tomorrow morning between 9:10, 9:30, 10:30, if this behavior is continuing. And chances are, even if they're buying the market late night today, they could be, the futures could still open in the negative, like a slight pullback within the first 30 minutes, and then they're going to come in and buy it and move them higher from there. So overall, it's too risky to be buying puts here, not because the market has no ability to drop further here. It certainly can. But at this point, we shouldn't be expecting the magnitude of the drops when we're already opening 300-400 points in the red on the Dow. We shouldn't be expecting the market overall to double those losses through the rest of the day. Now, at some point, maybe we can be minus 500-600 points, and at that level, I think a lot of institutional investors, they are going to be coming in and taking some bites at this market, because there's some great stocks that are underpriced at this point, which creates some bargain hunting opportunities. With that said, guys, on August 2nd, the Friday, it was a definite move 3. Now, if you study the 13 markets move formula, there's slight variations of a move 3. Some they gap down, they continue down for the rest of the day. Now, some gap down and they actually do this. They kind of catch the equilibrium. Overall, it's a 3 because the market gaps down, it moves lower, and it finishes lower than where it started. However, important to notice that in some of these moves 3s, there's kind of a spike higher towards the end of the day, which resembles some characteristics of a move 4. And particularly what we were observing is that the volume was spiking towards the end of the day, predominantly on the buy side, which shows us some institutional buying. Now remember, institutions, they don't go out and just buy all the shares all in one day. So they are prepared to add more to the positions as the market is dropping further today. At some point, there's going to be a moment where majority of the institutions, investors, they agree, hold on, this is the level that is a bargain hunting type level. We all just need to go ahead and jump in. And this is when you're going to see a huge spike in the red bars, in the green bars moving higher. So pay very close attention when that takes place, because that tells you when the reversal is actually happening. Another way to look at the move 3 on a Friday, it is actually comprised of these two 11 moves, okay? And when we didn't break and we didn't clear this level of 29.31 to the upside by the end of the day, that was actually an indication that the market had a high probability of opening lower today. So move 11, another move 11 within this overall move 3 on the Friday. Okay, 2-day sequence is 6-3, and this is how it looks on the chart, guys. Here's your move 6, boom, gap down. Here's your move 3. On a 5-day sequence, you get 4, 12, 9, 6, 3, and this is important because it kind of resembles a sequence that we've witnessed historically recently in December of 2018. And that was actually happening towards the end of the sequence. This is how the actual 5-day sequence looks on the chart for 12,963. The next market move for today we're expecting either a 3, 4, or 13. Here's why. If we examine the prior instances of the calendars of these 13 market moves, I clearly point out an instance in August last year, but the VIX was definitely much lower than where it's at right now. The closest instance we were able to identify was December of 2018. And look at this sequence. So after move 9, we're getting a continuation of down days 3, 2, 3. And then the next day after Christmas, we're actually getting a 7 where the market initially pulled back and then it went higher. So this is the closest of a resemblance of the current situation we can find. Now, of course, the VIX now is trading above 20. Currently, I'm recording this, it's at 2140. And so it's nowhere near these high levels right here. But at the same time, when this was happening in December, we had similar concerns, trade wars, all that good stuff. The only difference was, and the VIX was above 30, actually hit at some point 36 on that last day that 3 actually took place. So this could be today, right here. We could get a 3 with a VIX completely maxing out, and then the next day, towards the very, very end of the day, we could see it actually begin to drop, the VIX to drop, as they're beginning to buy in the market, and the continuation of buying could take place over the next couple of days. So this is what the historical data shows us. The only difference, again, is the fact that at the time, the Federal Reserve was increasing the interest rates. Actually, on December 19th, 2018, it actually increased the rate and by a quarter point, and this is what happened. So now we're in a situation where they just reduced the rate by quarter point, and gold chart is telling us that there's going to be likely more rate cuts in September, like literally next month. So we're in a different situation. So that's why we don't think the VIX is going to go to 30 or 32 or 36. The VIX will be contained most likely under 24, under 25 today. And once it hits that level, I think that would be the level to come in and start buying the dip from there. Now, the March resemblance was totally different because of the VIX environment, and the sequence was a little bit different. So overall, guys, this is what the VIX has done. And the importance of this is it did show some signs of exhaustion intraday in August, but today it's picking up again. And the fact, if we look at the 10-day chart, it went from 12 all the way to 22. Guys, it's pretty much doubled, right? So when something doubles from 12 to 22 in literally 5 trading days, what it really equates to is that that move is not going to be sustainable long term. It could be sustainable for another day or two, but it's not going to be sustainable long term. So we're going to be watching for a top in the VIX today or tomorrow. Once we nail that top, that would indicate a better entry level to come in and start buying the dip along with the institutional investors. So the key takeaways today, guys, it's better to stay on the sidelines overall and observe, because it's too late to be a bear, but it could be too early to be a bull at the open. So wait for clear signs of reversal to take big directional trades. So short any pop in earnings and buy the dip after the drop. And a good example we've shown you was OLED. And again, pay very close attention to what is actually going to be taking place between 3 and 4 p.m. today and 9:30 and 10 a.m. tomorrow. Get ready to trade some earnings plays tomorrow and the next day. There are a ton of them, guys. So get ready to rock. It's going to be a great week. I'll catch you on the next trade tomorrow morning.